What's up, you guys? Welcome. What's up? What's up? What's up? Time to get started, you guys. Man, I'm getting like progressively more bedheaded as the days go by. All right, hold on. Let me get some posts going. What's my All right, hold on 1 second. What's up, you guys? Don't forget to smash like button. What's up, chat? What's up, Zoom? Outside of DD band starting off the day. Crazy. What do I got here going on here? Zoom needs some music. Nah, well, the thing is with Zoom, yeah. No music. All right, there's no music. I mean, I pick some decent quality music, you guys. I'm not gonna lie, but let me tell you, it's you guys should be able to like jam to your own music as well. I know it's like it's a streamer trick. Avoid dead space. Dead air. All right, let's do this. Let's do this. Let's do this. So I'm gonna be like a no trade day today, and as exciting as that sounds. What's up? Good morning, Adam. Good morning, Ian, J. Hicks, Lucas. What's up, friends? Don't forget to go over to YouTube real quick. Smack that like button. Give it some. Smack that like button. Give it some love. Let's get right out the door. In the challenge account, I took about $1,000 profit on a short overnight, just on losing overnight hedge pressure. DD bands breached today. We're gonna get float. That's what I hopefully see a little bit of that. We have a rule: 58 is what we call DD float. If we do float off of this, that'd be good. Might be a sit out day today. We'll see. Put this here. do. So we get that ratio greater than half. Trade on float. So usually I'll buy off of that 58, 58. Also hedge pressure the same spot. Really similar to where it was yesterday. Nasdaq already tried to break it. So outside of these bands, typically, let me show you kind of like the setup in the morning. Typically, no trade, right? Back test as follows. 88% of days close above this green line. Zoom call. YouTube pop quiz. What's the percent below? Their trade very light. Bearing bull knows it. Adam. 8%. 8%. You guys are so smart. All right. What's up, YouTube? Welcome. Good morning. Majority of our community is on a live Zoom call right now. You are in a 45-second delayed stream. But I'm talking to like both y'all at once. I like multitasking. See this? See this? Look at this. I asked him about this really quick. Number one, third place. Let's go. Let's go. Hold on. I've missed 10 days of the contest. And I asked him about this win ratio. Because my stats are like 80%. Like 80% win rate. Something like that. I made a trade last night. It's now 80%. So these are the stats. 77.5 as of yesterday. Today's trade makes it 80. I've only had maybe like one losing trade, I think. Which is like right at the start. Right here. This one was a hit. Or maybe two. This looks like two losing trades. Pretty good, right? And I was like, what's going on with this? Why does it show I've lost more than 54% of my trades? And they go, but that's not trades. It created this over here. This little column is actually the number of days you've won. And they count the days that you haven't competed as losing days. So the fact that I'm in third place with a lot of red and this place is in 20th place, a lot of red, means they had big excursion days. Like they had one day that popped them on the leaderboard. There it is. This person made 10K in a day and didn't trade much of the competition. So it's actually, when somebody messaged me, he's like, wow, how are you in third place losing 54% of your trades? And I'm like, oh no. They were like, that's a pretty shitty win ratio. And I'm like, hey, I'm 80% win rate. What are you talking about? So it's actually the number of winning days that you had in the competition. And they said they do count the days that are zero. Even if you entered late, it still counts. So on my counter, I've got the first 10 days of the contest as zeros. So it counts as a loss. So apparently it's a loss if it's a zero as well. Instead of or it's winning days. It's not losing days. So it's the number of days you've made profit over the total number of days of the competition. So the fact that I've missed over half the days of the contest, isn't that crazy? What's up, YouTube? What's up? What's up? You already made some money pre-market. Wisdom King, what's up? Amato Med, hello, what's up, guys? What's up? What's up? All right, today Tuesday or today Wednesday? Today's Tuesday. Let's get back up. Pre-market setup, just to make sure we are aware of any kind of news events and catalysts. Today's a very light week. Nothing. Existing home sales tomorrow. Thursday, your building permits. That's expected to go up. Initial jobless claims, continue jobless claims, et cetera, et cetera. It's typical Thursday stuff. New home sales. It's a light week, you guys. Not much going on here. Already outside of DD bands. Already playing inside of here. Don't really like to play this game too much. No trade below DD band. 88% of the chance of 88% of the time we float above. 8% of the time we close below. So this is closing stats. 88% of days we close above this level. 8% of days we close below. Actual stats from our techniques we teach. All right. Ooh, baby. So this is probably a glorified no trade day today, but we'll see. I'm also juggling 20 funded ETF accounts, so I might trade some of those today. And these days like this, I might sit out. But so I'm trading the competition. I'm trading 20 funded elite trader funding accounts. So I'll be doing that live on this stream. YouTube, do me a favor. Do me a favor, you guys. Let me get the stream out there. We need to promote. Everybody go here. Go here. Go here. Quick. that like button and leave a comment. Thank you, thank you, thank you. Monthly master queue. Yep, as soon as we load up, we'll go over it. The question is, do I want to do anything right out the door? Nasdaq on the edge here. S&P close to the edge here. The float applies to S&P as well. When this ratio right here is greater than half, there tends to be a float trade. Now, the problem is the fact that it happened pre-market. I hate that. I hate when that happens pre-market. It destroys the potential of that great opportunity here. Russell was just kind of blah overnight. No pivots nearby. Decent RZ to trade. Yeah, I think so. What's up, Pefcos? What's up, you guys? What's up, Ian? All right, thank y'all. What's up? So looking for something like this. 4% of days we close outside. We'll just keep an eye out on this one. I do think this kind of trade is a kind of day is trading lower. Keep in mind, anytime you have these last little pre-market moves like this is kind of the high of the day you're battling with already. So markets are trying to price their way down like that. There's your equilibrium. No telling what's going to go on. I forecasted this yesterday in a Discord. If you guys remember my post, I literally did this. I was like, I have this gut feeling. I said, I have a gut feeling I have an expansion of the range, pop up and gap up in tomorrow. Today's selling indicated something to me, that we would span the range and go to lower lows, go straight to monthly hedge pressure today. So last night I did draw that, and then we just right down there. So lucky me. I just this like it's kind of like feeling. I don't know. It's hard to describe. Days like this, a red day today. We're going to close red. This is not going to be a rally day. These are your highs you're battling with, and I don't think we're going to break that either. Hedge pressures and all of this are going to be stable as resistances today, I believe, but we'll see. Anything good comes up of this. Not going to touch the market till we get open. Let's go straight to liquidity maps because that's going to be the most important part of today. Keep an eye out of that. Liquidity maps are going to print up what's going on. Keep an eye out for right here when this comes. Okay, 30. Market's open. Let's go. Let's see if we get the opening moves here. As like a quickie little bump. All right. So the resiliences are negative. So right out the door, resistance here. So like I said, these highs are going to be resistance. Resist. I don't normally short from here. If one were to take that short, we off the gap fill here. So let's see if we get anything good off of this. It's resistance. These indicators here, these white ones, res less than 0. We have resistance at the top. So high of the day today, pretty much QQQ about right there. Pulling back. Straight up liquidity map right here, bear short up. This is resistance off of actually even here. Resistance off of that as well. You'll also have support off of the bottom here. It's gonna be a fight. You have that 88% chance that you're trying to survive right here. 88% chance. So we could have a nice little bump here. 8% chance we close below. All right, so the actual stats I'm looking at. So outside of this green band, I usually don't trade. This is like Matt's no trade zone. So this might actually be a glorified sit out day. I don't go out there and risk a lot whenever these are down like this. PJ's made 7,000 on your ETF account. Need 9K, 2K more. Baby, let's go. Got an ETF account yesterday. Gonna try it out. Also got an ETF account. What about Dow? I do even has an interesting chart. Yep. Okay, so let's let this market just sell off today. Let it do its thing. Watch S&P. S&P liquidity maps. This is my guide for today. S&P in the same boat. There's that float off of S&P. There is clean resistance off of here. So it's really hard to say because I'm not going to trade at the bottom. I'll trade any pops here to short them back down. Remember, anything in the middle, I always trade from here to here as a guaranteed setup. So let me walk you through the guaranteed setups I'll take every single time. Okay, you guys know every single time here to here. Every time. If we pop. Every time. This ratio greater than half, it's good. This is only on the break. Okay. So that's so it's on their trades today. All the liquidity maps are down. This is down. Resistance there is down. Open in middle, likely close in middle. Russell's going to be flat today. Let's just kind of spot check with our eyeballs. Where's that DD band? So there's usually what we call float. Float is a trade off of this band. Monthly hedge for sure is there as well. Opportunistically, if I were long, I would buy off of here. Like every bone in my body is telling me not to touch this today. So we'll see. All right. Monthly maps. Let's observe. This is going to forecast 3 months out. These guys really quick. I think I'll take the QQQ bear zone resistance trade. All right, let's take a look at what we get. Okay, let's do this. Monthly maps here. Is that Q's monthly map? I think my monthly map's locked up on Q's. There it is. Okay, so how you read monthly maps is as follows. Pretty simple. So no trades at the open. This is kind of very important to understand. There's no setup today. All right, monthly maps, a game changer, dude. This is like what we create. So this is looking at market maker options and finding what the options landscape is doing. There's 4 different things on here on this checklist, okay? Let's match them up. All right, checklist. Number 1, we currently are trading in bear territory. You can see that this light gray is bear, dark gray is bull. So right now, so far, we're in a bear zone currently. Over the next 1, 2, 3, 4 days, and we pop back into bull. So we have about a week of bearishness here on the Nasdaq, right? All right, another thing, number 2. What is the bottom of the bull zone doing? Sloping up or sloping down? Well, for 3 days, it's sloping up. So for 3 days, you have bulls exiting positions. The bear zone for 3 days, bear zone sloping up as well. Bear shorting more. So you have selling and shorting. You have basically a short wave down. 1 to 3 days of selling before we're back to rallying. And is the volatility increasing or decreasing? If the space between them is smaller, volatility is decreasing. There's practically no volatility. So the market is in a bear zone with a steady decline and no volatility. So the market is not going to do this today. It's likely going to do this and be smoother. So either move straight down or move straight up, whatever path it goes. It's not going to be a big nasty chop fest. You're not going to get chop all day because you're lacking volatility. So liquid market and just dedicated selling. And SPY is going to look exactly the same. Well, let's check it. No trades right now. You're be smart. So what we do is we actually have like methods. I don't know why SPY is displaced on there for me, so I'll have to figure out what's up with that. Let me reset my platform here. What's up, YouTube? What's up, everyone? Say hello. You're new to the stream. Remember, no. Try this again. There we go. SPY in a similar boat. SPY's in a bear zone, but it's actually stronger and more bullish over time. This is sloping down. This is sloping down. So SPY's actually more bullish. QQQ is more bearish. Similar boat, no volatility. Especially like leading into the election, there is no volatility, which is interesting. This is the only volatility that we see. Baby. It's his birthday. It is. Guess you got birthday month. He's got birthday month. All right. All my opportunities here. I'll tell you, we had a great Gatsby party. Burlesque dancers. People swinging from the ceiling, dancing inside of crystal balls. It was crazy. I went to this animal safari and got to swim with otters and play with giraffes and stuff. And giraffes, the hell, sea giraffes, and play with them. Beat all kind of animals. Here's that Nasdaq support right here. 88% of the time we close up in that zone. 8% of the time we close below. So you gotta be very careful on these. Right at the bottom here, I'm gonna draw a line just so that we have it. Right about here is that DD band on Nasdaq. So these are the rules. 88% we close above here at the end of the day. 8% we close down here. And then with the liquidity map, which is forecasting order flow and predicting volume, right here you're going to see, very simply put, that the only trade, this is a guaranteed trade I'll always take. I'll always go 3 slashes mean a break. I'll always take that leg if we get it. I need the confirmation. It's a high probability trade. It's like 90% trade. 90% of the time I will take this under ideal conditions. These are actual stats from our back test. You guys never heard of us before. We trade with just stats. That's roughly 90% here. And I'll cut. Only on the break will I take. The resistances today are both down. So this is going to pull off of there. Res less than 0. This white line being less than 0 is resistance from the halfway point. So because if res is less than 0, we're not going to break through there pretty easily. There's also a trade off of that. And if you do go here and break, it's another trade leg down. Down here, no trade. That's it. I'm just going to wait. Question is, do I short off of that? That is the main question here. Yeah, yesterday said we'd be in a bull zone until the election. Yeah. So those of you like in the options spread world, like 495 is the call area that I'd likely to break if I was selling vertical call spreads. I'd buy 495s and sell 494s. So in case you break through here and go, you're gonna hedge that trade up. In case you close below 494, you're gonna make a profit. What's up? The trades like this are pretty simple. On the options side, is that we're unlikely to fill the gap and keep going. All the data says we're not going to do that, so selling options up in here is the perfect spot. So liquidity maps are going to forecast where that order flow is likely to be based on where the options is, baby. Thank you. My birthday. Y'all want to see something cool? Hold on. I want to see. I don't know if y'all saw it yesterday. All right, here's a little quickie little highlights from the birthday. Hold on. Oh, great Gatsby party right here. How do I pause this? You see me in a tux, suited up. Oh, it was nice. To go eat. A place called Komodo. It's like a Miami/Vegas restaurant. They have one in Dallas. It's pretty decent. Had me like a tequila drink in a Pikachu glass, clearly. And we're serious in this family here. Yeah, this is it. Like people like dancing. It's super 1920s. I mean, it was like a ball. It was crazy. And there was a required black tie dress, and you had to be dressed as a flapper if you were a girl. They wouldn't let you in. Strict dress code. Look how cool that is. A handsome devil right there. Look at that guy. That handsome guy right there. Anyways. And I got to go to the safari, play with the animals. Baby kangaroo. My favorite part. This otter, like, would not leave me alone. Hold on. Like, was like... You get to swim with otters in a enclosed space. It was great. You guys know I like a big soft spot for animals. And every time I put this otter down, she'd be like, nope. Nope. Slept on my shoulder. Thoughts on Apple? Yep, we'll do it in a little bit. The otter just wanted to be like, I'm gonna sleep on your shoulder, okay? I was like, all right. This one wouldn't leave me alone. That's my favorite one. Anyways. Happy birthday, Matt. Oh, there we go. That Q pop. There it is. The question is, do I take a short? That's one question. Maybe I will. It's like every bone in my body is something out to trade. Oh no, DD ratio is going positive, so I don't know if I want to take it. But there is the resistance there. And the funded account's certainly not. Right now I just got I'll be trading 20 elite trader funded accounts. I'm almost made all of them, almost done. Took me about 4 days. Wait, hold on. 5 days, because they have 5-day waiting periods. So 5 days to get to the funded. So I have like 20 evals passed. I'm just counting the timer down. So by like Wednesday or Thursday, I'll have 20 funded accounts. So now I've got like half of them. Question is, I always take the long from here to here. That's like the 90% chance. I love taking that long. Up through bull zone. You want to try for it? Micros. It's like such an unstable day though. It's like resilience is greater than 0. Whatever. Let's just do it with like 3 micros. Pop it through the middle. All right, only trading a bull zone. I love taking that trade. I'm a little late on it, but I popped it with some micros. Don't laugh. Don't make fun. Let's pop it through the middle. That bull zone bounce, bear zone bounce. I take it every time. Right on the pop. Let's see if I get lucky on this. Just push it to the bull zone and I'll tap it. I'll tap it closed. I take this trade 90% of the time. It will, from here, it'll tap the bull zone. DD ratio is greater than half. We'll tap the bull zone there. Something small though, because I'm just not really a strong market, to be honest. I need to crop that leaderboard. They have like a 10-day head start on me. That's the problem. know, not the strongest trade. Not the strongest market, but it's typically a strong trade. That's why I just hit it with micros. Not really too worried about it. Just like SPY really quick. SPY did hit. It is a dangerous scalp. It's going to go quick if it goes. It'll go quick. I'm not going to reverse short when it taps full zone. If it just goes, it's going to go. I'm going to let it do its thing. Micros because it's a lower probability trade. I mean, sorry, it's a higher probability trade, but it's a lower probability market. I have some things going against me. These resiliences are negative. It does not want to break this half gap. It does not. It wants to resist here. So it's a really... Betting on the break is not the safest trade. So I always trade it small. And it's only there. 495 and I'm done. If I get it. Was that your favorite part? The birthday boink was always the favorite part. Oh yeah, birthday boink is always the favorite part. NVIDIA floating with price. Yep. Like I said, I'm just be careful on this one. Just micros. I don't but there's not a lot of volatility, so we won't experience a lot of drawdown. Just a good part. VIX. VIX is bearish, which is good. We want to see VIX with the bearish liquidity map. This is forecasting the directional flow of the VIX. It's actually downward, which is good for any kind of long trade. You don't want a lot of volatility to kind of be present if you're doing any long trades. Like I said, just something really small to avoid a lot of drawdown. This is the resistance, though, and it's not going to be an easy break. That's why I just popped it with some micros. Something small. Small, just from here to here, just on that scalp. 90% of the time when it enters the middle, it'll go all the way through. It's a strong trade. That's it. Right at 495, I'm gonna tap it closed. What's up, Brian? Good morning. Come on. I hit it with the challenge account too. Challenge account's already up 2,000 for the day, so I can afford to play with a little bit of it. Resistance, like I said, I'll lose about 300 and I'll call it. I just put micros on it, nothing big. So I only hit it with the micros. So it's a high probability move, but I don't ever go super heavy into it. Something tiny. Tiny. What's up? Yo, Jason, what's up, dude? Oi. Deteriorating Nasdaq conditions, not so good here. So normally I like to bet on that support that we go through. But the resistances here are really strong at the top. Like one more leg up where it turns around and comes back down. 88% of days will float above that green line. So it's kind of like here to here. See how well SPY's managing. SPY's doing pretty good here as well. Problem is these negative resiliences are pushing the market away from here. That's the problem. So let's see if QQQ finds itself some footing. I'll pop it to 495 and that's it. If I do get lucky and get this trade, it's 495. That's it. So I put in micros, risk management. Anytime the certainty is low or the odds of high drawdown is there, I always trade small. So risk management is like the trick. You guys are trying to do trader funding programs. It's all about knowing how big to position, and that's kind of like what we do here. Even though the odds are high, the potential for reversal here, I have competing indicators. One of them is like hell yeah. One of them is like oh no, and the one that's like oh no has me putting small out on the table. So I don't have like full confluence. So when you have full confluence, don't bet big. And when you understand that there's a lot of volatility in the market, especially selling days, don't ever go in like super hot with like, 25 minis kind of thing. These are just micros, nothing crazy. And if this trade doesn't work out, it doesn't work out. But we'll see. This is a completed trade from here to 485. I have a 1 strike drawdown. It is a 1-to-1 trade, which I hate doing, which is why I only popped it with micros. But like I said, if we obtain the blue, it's a 90% chance we go all the way through and fill the gap. But then it's going to resist. So 495.4 is like the highest that we're going to see today. So I'm trading Nasdaq as the most to move, I think. As far as on the momentum side, Nasdaq's monthly maps are bearish. S&P's monthly maps are bullish. So we'll see if I get there. It is. There's the go. There's the go. Let's pop it, baby. Let's hit it. Let's go. They don't call me the wizard for nothing. Oh, baby, go. Let's go. Come on, baby. Come on, baby. Again, I just only micros, but the trick to doing well as a trader, and we teach a whole webinar series on this, it's about position sizing. That's it. The only way you make money in any form of trading, whether it's your own account, trader funding programs, whatever, it's all about the correct position size for the risk you're taking. That's the secret to being a good trader. It's about picking the right direction. There we go. Let's go. Let's run. Come on. Ooh, that volatility is crazy. 5 minutes till that 9 o'clock comes through. I don't know if I like what I'm seeing. Market is looking all spastic right now. The 9 o'clock candle is going to come in. It's going to be pretty quick. So the hour is going to switch over in 5 minutes. Ooh, look at that. Look how quick it's already moving right now. Come on. Come on. Second attempt failed. Not the best setup. All right. Let's see if it goes one more time. Conditions are not deteriorating. They're slightly improving, but they're not good. So it's still not good enough to fill the gap. Unfortunately, these white lines below the chart, these are gap fill predictors, and they're both negative. So that's this downward pressure right here. I am betting against that because this is a stronger signal. This is a bullish signal. This market wants to kiss bull zones. This wants to go there. And as it's trying to get there, we'll see if we get it. Am I trading overnight? Only in the challenge account. I have to because I got to catch up. So this ETF contest, everyone got like a 10-day head start on me, so I got to trade overnight. And I normally don't recommend trading overnight, like ever, if you can help it, because it's a huge commitment to trade overnight hours, and you get less. It takes longer for moves to play out, and so you're basically like committing your whole evening to watching a trade. Not really the best thing you want to do. Come on, baby. Come on. Again, this is going to be a bull trap. When this goes to bull zone, where I have this 90% chance on the break, it goes to there. It's a bull trap. So, like, I don't jump in and take the chase on this. And I'm also not going to reverse it, even though the desire of this market is to continue to sell. I usually I err to the side of being bullish almost every day if I can. If the market's bullish, I'll take bull setups all day long. I'll scalp it from here to here all day long. And people always make fun of me in the group because I'm always like pounding my fist every single time I hit it. I don't care what the conditions are. When we break in the middle from the bottom, every single time I take that trade. Every single time I hit it, every single time. So, although I'm not a big fan of the one today, I always try to take the R&R, the probability, even if it's a one-to-one trade, 90% of days it will break and go to the other side when this ratio is greater than half. So I take it every time, but even in bad conditions like this, I take it small, just micros. So my risk is contained within like, $300 to $400. Either way, it'll make $400 if I win. It's basically how that works. What's the line of 492.5? That's your DD band. DD band. So notice I'm keeping my risk in a cool plus or minus 300. When the 9 o'clock candle flips, which is going to be in about 30 seconds, a candle is going to come out of nowhere. And I'm hoping it's a green candle. And as soon as it pops up bull zone, I'm going to tap out of these positions and call it. And I'm probably not going to do much trading after this. Now, the other side of the coin, this could be a red candle that can just basically whip my ass. A dip red candle that reverses back up. I hate those kind of moves on hour switch. So I have to have enough like ability to encompass or to allow a certain amount of drawdown to not get squeezed out of the account. There it goes. Every single time, baby. Pop it. Hit it. Come on. Go. Come on. I hate this day. It's trying for it. It's definitely trying for it. Selling pressure is very strong, though. Come on, Nasdaq. 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 Come on, Nasdaq. Break. Call me a wuss, but I don't like this. I'm hoping that 9 o'clock will give us some oomph. Stocks are holding flat. Slightly better off the open, which is decent, but we want to see this resilience number go higher. Nasdaq is close enough, or it might make an attempt. I think I'll just hang on to it. I don't have much to lose. Ooh, baby. Ooh, baby. Good. Oh, ooh. Nasdaq, it's trying. It's trying. All right, let's look at the scanner real quick. Hold on. It's trying. It's trying to get there. Little pop and drop, though, on whatever stock that was. Let's go ahead and look for the scanner. Let's search for half cap breakups, because that's what we're kind of seeing right here. Let's see which stocks are like right on the edge here. Amazon. Come on. Come on. Amazon's the one popping through. Yep. Microsoft. Microsoft's a good one today. And then NVIDIA. NVIDIA's around the edge too. Let's keep an eye on NVIDIA because NVIDIA and Nasdaq are going to be kind of like hand in hand today. This market sucks. Microsoft very strong today. Apple and Microsoft are canceling each other out. Apple on the downside. Yep. Microsoft on the upside. It's usually canceling each other out. Like I said, micro's on the table. Market's fluctuating around. There's a 600 drawdown limit on this one. That's why I'm not taking much drawdown to get close to that edge. I'll close out closer to it. This is the first trade on this one. I'm not necessarily going to put too much risk on the table for it. It is a riskier setup to take too. That's kind of the crappy part of this. I have to be able to sustain a little bit of drawdown without going over. So when I know the risk is, or not the risk, but I know the probability is high on the trade, I'll take it. But when I know that the move against me is going to go at least a point, I got to make sure I can sustain that drawdown without taking too much heat. So Nasdaq resilience is greater than 0. It is picking up some steam to move, which is good. What we want to see is we want to see this guy right here greater than 0. Good. Good. There's that NVIDIA right there popping through. That's a market cap weighted aggregate of all the stocks filling their gaps. So the stock's going to fill their gap. You can expect the index to fill its gap as well. Maybe IWM under MHP flush. Let's see. These yellow lines and blue lines are net resistances. IWM flushing not necessarily equates to the index flushing because money is rotating out of one into the other. We've kind of been seeing that for a while. Nasdaq just does not want to give us love today. Like I said, it's going to fight for that trade. I've been holding it. It's good if we break through. But once we fill the gap, I mean, I'm a call. I'll be done with that. I'll scalp it from bears and bulls on all day long, though. Don't get me wrong. Come on, baby. Come on, baby. Come on. Come on. I got like $10,000. I got to catch up. And we're closed. And we're closed. And we're closed. Oh! Whoo! Can't do anything else. I'm not going to do anything else. Too risky. All right. Too much. Too much. Look. Challenge account. $3,000. Funded account. $200. That's it. That's it. No more. No more. Nothing else. Bull zone tap to there. Fill the gap. Done. Call it. There it is. $3,000. That. Funded account. Too rich. Too rich for my blood. $200. $200 with micros. But demonstrate the trade. I don't normally take this trade as the first trade in a new funded. That's the problem. So I don't short this as well. I don't short the bull market. We call it every single time. Every single time. Ready? Every single time. Every single time. 90%. 90%. We have a 90% setup. Beautiful. We train people on this. Our training, this is the last week of the $20 training module. It's going back to $200. So if you haven't done the Zoom calls to learn this particular setup and the other 90%ers, 90% of the time, this plays out. It's incredible. I pound my fist at the table because I do it so often. From here, it's a toss-up. I'm not betting bull or bear. This is a sit-out day for me today. But typically, it's ranged inside of where all these crazy colorful arrows are. 90% of the time, it works every time. Now, these conditional to these lights being yellow and green are all pointing up. So they're all yellow and green, and the red ones are pointing up, which is good. Very good. So the 90% rule applies, and the rule is you break from bear zone to middle, you always go to bull. I take that trade every time. Every time. I take it every time. So let's see if that's enough. The problem with this, the challenge that I'm in, is that people got a head start. I didn't trade the first 10 days. That's the problem. So I'm having to aggressively trade to catch up. And I'm trying to make it to where, you know, it's manageable. I'm not trying to, I have to kind of take a little bit extra risk and trade overnight and stuff to get extra trades in. But it's been okay. The problem is that I need the first place, and me has like an $8,000 gap, and I got 10 days to fill it. So like I said, from here, I just trade to fill the gap, and that's it. As you see, there's red arrows here, and there's the resistance. Like I draw this at 8:30 when the market opens, my time. I draw on the chart. This is the setup. I think most people in our group are kind of like scratching their heads, like, what do we do from here? It's not a bull setup for me to continue to chase the long, but I'll trade bears on the bull zone every time with that positive resilience is good. Spread pay nice, 45 cents to 68 cents. You got 51%. Very nice, very nice. Nice, Brian. Nice, everyone. Again, not investment advice. It's just, you know, personal opinions here. It just wants to push through. There's a trick that happens when you flip that delta, or that delta and gamma accelerates that flip on a bear zone break in the middle. This right here is a chase every single time, and I like pound my fist on the table every single time. Favorite trade. Favorite trade. One of my favorite trades to take. Bear zone. Easy trade. And then I'm done. I don't need to do anything else. That's it. I do have a team meeting with the development team of Rocket Scooter, as well as the sales marketing team in a little bit. Zoom, do me a favor. We're gonna move to YouTube early. Everybody, head over to YouTube real quick. Again, help us. Thank you, Brian. I love you, man. All right, see you guys. 20 points. Stop for NQ. Shane. Head over YouTube. Everybody, go. YouTube now. All right. 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 My friends. Glasses always come on when I get it serious about the market. There's no delay now. Thank you, thank you, thank you. Love you guys. Love you guys. Appreciate it. All right. The question is, where do we go from here? Not the biggest fan of this type of setup because it's strong, and if the bull side does catch up, it's good. Now, this hit one of our classic reversal pivots called DD band. I'll show it to you in Thinkorswim just so you can kind of see how strong it is. The DD band is an exploit of margin requirements. Like, we reverse engineered one of CME Group's major programs that set margin requirements. One of the first things I did. You guys might be like, who's this yokel on stream here? It's right here. This piece of paper right here. Certificate I got for being top laser tag player in the world. No, I'm just kidding. That's a chemical engineering degree. So I'm a mathematician engineer by trade. I'm a full-time trader about 10 years ago. Almost 10 years ago. We do a lot of data mining, a lot of data crunching, so you don't have to. And so we understand that the expected moves of the futures world are based on actual positions that are reported, and they use that number to set the margin requirements. Use the margin requirements to reverse engineer those expected ranges. This green band, 88% of days, futures will close inside of this green band. 88% of days. I reverse that green band almost every day. Taps it. For 8% of days you'll close below, 4% of days you'll close above. This is the last 6 months back test. This is current numbers. When this ratio here is greater than half, it's even higher probability that you stay above it, because this is showing you that the stocks themselves are bullish. Another thing is when this ratio is greater than half, when the index is in a bear zone, it wants to achieve the bull zone. Because the index is going to track the stocks. The stocks are bullish. Why is the index going to be bearish? Arbitrage. This is a 90% probable setup. 90%. If any of these arrows are pointing down while red, then it doesn't work. It's high probability. It's like 70%. If all the lights are yellow and green and arrows are pointing up, or arrows are pointing up if they're red, which is all of this, is a check. This is 90% setup. I hit it every time. So if you guys haven't taken our trial yet of our software over at Rocketplace, you have to. You guys can access this stuff too. For futures trading, hands down, you're gonna love it. I'm done for the day. Done. Not a short from here, but I'm done. If we hit bear zone a second time, I'd be willing to take that trade. But I believe today closes lower. I'm not necessarily wanting to, you know, risk it for the biscuit here. I'm happy with the gains I had. You guys haven't seen Rocketplace yet. Quickie little plug. We're a marketplace for all kind of trading stuff. I'm the CEO of the company that made the Rocket Scooter trading platform, the one you see on your screen. I also created Rocketplace, which is a trading marketplace for all kind of stuff you want to learn. There's all kinds of different traders. There are options traders, futures traders, elite trader funding is even here. Traders Wealth Lounge. There's tons of people. There's psychology. You can get psychology mentoring. Any kind of stuff you can want for trading. You can shop around. We have a bunch of cool stuff. We've looked at all these folks. They all offer quality things. Here's our stuff. When you guys all check it out. We're doing like a 3-day money back thing. If you want to, we're doing these Zoom calls twice an afternoon. Sorry, twice a day. Once in the morning. Private Zoom call in the afternoon. It's all about training. We have like a 20-step program on how to go from like 0 to mastering trader funding programs. If that's what you're trying to do, this part of this program will teach you probabilities and odds. Why did I only trade 5 micros here instead of minis? How did I know to do that? Right? Managing drawdown is the secret. You guys want to start gaming the system as much as you can. Understanding when your probabilities are high you take the trade. But if your drawdown potential is high, you lower your position. So position size scaling is the secret of becoming a winning trader. That's how I went from being like a nobody person, just like longing, shorting the market back and forth, not really understanding that the real secret is not picking the right direction. The real secret is betting the right size. If you bet the right size, that's the mastery of being a trader. It's the right size for the risk you take. That's it. That's it. So if you want to learn how to do that, click that link I just posted. 3 days, money back. Promise. If you don't like the course material, after 3 days, you're like, it's not for me. I understand. Just a quickie little plug here. You guys will love it. You can leave a review. You can read what customers have said or what our folks have said about our training program. These are all authentic reviews from people that actually purchased the thing 2 months ago, 1 month ago, 1 week ago, 15 days ago, 4 days ago. I don't think we have anything other than 5 stars and a couple 4s. This has been a game changer for my futures trading. 28 master class has been absolutely mind blowing. We'll teach you stuff, guys, that'll help you through, like I said, understanding of how to scale position with the risk you're taking. We can't promise you'll get better at trading. Obviously, we have to be honest. You know, a lot of people out there like to promise you the world. I promise you're going to learn something, though. I can promise you that. But you'll learn a technique that all the pros use, and all the pros use this technique. By the end of the courses, you'll be drawing trade plans with arrows like you see me doing. You'll be drawing probabilities like you see me doing. You'll be understanding what your position size scale factor is based on the risk you're taking. So let's start off with some fundamentals today. I'll teach you some cool things in the course. Now, again, this is Nasdaq, right? I'm sorry. So a couple of our setups are pretty cool. This green line, those DD bands, 88% chance. Or 88% of days close above, 8% of days close below. I'll be over trading if I do anything else from here. So this is a really strong probability right here. There's another cool fact that of days that open inside the band and break, of these 8% of, or sorry, of days that break to the downside, a third of them go all the way to the upside. So the drawdown is really bad if you're wrong. Like if this breaks into here and you're like, oh, hell yeah, I'm going to take that crash. 2 out of 3 days, it will stay below. 2 out of 3 breaks of these 8% days. Sorry. Of all days, 8% will close down here. 4% close up here. Anytime you break to the downside, a third of these rocket all the way up the other way, which is hundreds of points on the Nasdaq. So because of that, I don't trade outside of these bands. Drawdown potential is too crazy. So you say that like this is the no trade because you just sit out. No trade down here. You guys understand? Everyone in YouTube, type yes if you understand this. This is why we don't trade this one. Not that the direction's hard to pick, but it's because when you break, 2/3 are here. And these are actual backtest stats. Yes, everyone on YouTube, do y'all understand? Let me teach y'all something real quick. It's 300 points. 2/3 of days will close below on a break. A third of them will go 300 points the other direction. You guys got it? So because you're like picking up pennies within a steamroller, 88% of these days want to go back in here anyways. Small probability you go down and stay down. And even if you are wrong, majority of the time it closes in here, but a third of those breaks go all the way up and go the other way. Drawdown's way too crazy to play outside of these green bands. So we always call it a sit out day. Okay. Number 2, as long as these lights are good. Talked about that one. 90% chance that breaking from bear zone into middle goes to bull zone. 90% of the time. Yeah, pressure hold keys forever. That's what I'm talking about. Market always goes up. Did you know? In this class, the statistics that we teach you are going to blow your mind. Did you know 70% of all monthly candles are green? And of the 30% that are red, 60% of them recover a third of their loss by the end of the month. So if you scale your position to lose no more than half of your account by the end of the month, statistically, blindly logging the market and scaling your position size to maintain that half of your account by the end of the month, granted you lose 20 days in a row, you will still make money over time. And we prove that in our courses too, and I show you the whole case study for that. Which means all you gotta do is wake up, do some math and say, this is my position size today and this is my stop loss. Pick a random number between 1 and 10,000 and literally long that many seconds into the market, and you will make money over time. It's incredible how crazy that statistic is. So I do everything I can to try to be a bull. That's how strong the bull market is, percentage-wise. Even strong sell-off markets, COVID, 2008, red months recover a third, 60% of those red months. So we give you all these cheat sheets to teach you these probabilities, and we're about to bake them into the platforms. The platform is about to become like a probability machine. It's going to show you probabilities of gap fills, probabilities of this, probabilities of that. We've been assembling this for years with our techniques. But these are the actual numbers that we have. Go with it. So 90% of the time, this trade goes to there. When this ratio is greater than half and these lights are all decent. If these don't all agree, it's still like a 70% chance. Here to here, and I close out every time. I never take the break and keep going. Another neat thing is when you open in this zone, that same stat applies. %70 of days will close down inside of here. So 90% is just this trade from here to here. 70% of days we will close in the same zone we opened in. Under these conditions, 30% of days break to this side. Practically 0% of days it'll stay in the middle. So when you break from bear to middle, it does not want to stay in the middle. That's why that trade is so strong. And that's it. A stat. These are gap fill predictors. The S&P wants to fill its gap this way, which is the white lines on the box. Nasdaq is positive. They're competing. There's divergence. The index divergence light is on to tell you that, or it's red to tell you that. S&P wants to go up, Nasdaq wants to come down. So while Nasdaq wants to go from here to here, that's why I was longing Nasdaq, not S&P. S&P wants to have that move. And when there's a divergence, I always bet on the S&P winning the game. I bet. The S&P yanks the Nasdaq around. The Nasdaq does not yank the S&P around. So my long trade ends right there, but it doesn't mean I short the market. It means I'm watching to see if the S&P also goes positive. So if we go look at the SPY chart right now, it's going to look a little probably less cool. I haven't even looked at SPY all day because it's the booty one. Look how less cool SPY is. SPY is not breaking through and going as easily because that resilience is negative. That's why from the start of the day, Nasdaq was the stronger trade. It was the one closest to zero. That's how I do it every day. Same thing. Yeah, if it's in the middle, the bet is the DD ratio is the bet. The bet is if it's in the middle, it's going to want to go higher rather than lower. So while I usually end my trade right there, I don't take a short from there because 70% of monthly candles are green. And in green months, 50% or 60% of daily candles are green. So green and green and green and green. Like I find every excuse to be a bull. The market's moving through bull territory. I get decent bull signs. I don't take the short trade, but I do exit my long trade because in case it doesn't continue, it's likely to fall. So I basically just, I fill that gap right there and I get out. That's it. Good question, Andrew. Travis said those are great examples, Spy. Right, so I use the 2 indicators at the bottom to like help me figure out which is the stronger bull setup. In trader funding programs, you want to take bull setups more than bear setups. You always do. Because if you can find a bull setup, it will be less volatile. Here's a trick as well. Bull setups become less volatile as they climb. Volatility is the amount of V you get, the dip. Discrepancy between buyers and sellers. Bear markets become more volatile as they sell. These trader funding programs, I love them to death, but they're like a carnival where, like, you know, the milk bottles are fucking nailed to the table, or the basketball rim that's bent slightly so that the ball barely fits in, which is okay. They game the system. We got to game it for it. We have to understand that the bent rim or the glued bottles is drawdown. That drawdown limit that you get in trader funding programs is designed to make it hard for you. So drawdown is your battle, your enemy, where the rim is bent. Then don't look for short setups that are going to draw you down before you are right on the trade. Wait for strong, decent bull setups that are going to have very little drawdown. You saw me take 5 micros, and I said I'm going to lose no more than 500 on this trade and make 500 if I'm right, give or take, right? So I knew that I have a less drawdown, trading the stronger bull one and taking the long side. You guys want me to teach you something about how look, I got 20 funded ETF accounts in like 7 days. All right. Here's the trick. I'm not shorting markets. If it's a sell-off day, I'm mostly just like, how am I going to sit out today? So you guys want stronger trade setups and you want one stat to take with you? Look for bull setups and sit out of bear ones. Because if drawdown is the key to your loss, which it is, then long trades will have less drawdown statistically in short trades. The dips are smaller. The dip on Nasdaq, very, very, very small. Anyone else shorting the market? And so if I am shorting, I always short with the smaller position size because the drawdown is crazier. So, like I said, you guys can watch me every morning. I'm going to take these accounts all the way to payout, show you guys the whole process. We love the folks over at ETF. Those are our buddies. There's some great peeps over there. And you guys support the stream. We'll trade live every day. Get the sub to the channel. There's very little strength on Nasdaq right now. Right, negative resilience is definitely the key to not being long. I just don't know if I do want to take a short from here or not. Let's look at S&P on this level here. S&P's looking a little booty. Nothing looks good here. Russell still has MHP resistance to short or to fall to before any long setups even appear on IWM. So yeah, a little strength refuses to sell off. Like I said, I don't usually bet against the market here. It is hitting what we call our overnight dynamic hedge pressures, which is also strong resistance. You want to see something cool? Last night I drew that we might higher highs and lower lows, just in whatever direction it's going to go. It's hard to pick. I'll say if you put a gun to my head and tell me to pick something, I'm going to say down. I think I'm not taking the bet down, but I'm going to say down. But not down too much further. So that these stats are still, yeah, Mike, totally, dude, totally. Ain't no strength, baby. One final attempt inside of here, I think. I take this scalp fairly often, though. But that S&P is deteriorating a little bit, so it might have some good downside to this today. By the way, our 20 days webinar for $20, that deal is going away this week as well. It's going to $200 for that webinar series. So if you didn't get the Zoom call package for, $200 add-on, if you didn't get it for $20, you got a week to lock it in. $20. Yeah, I don't normally bet against bull markets, especially bull breakouts. I let them break. Let's check NVIDIA because that's really what's controlling cues today. I think NVIDIA is trying. Yeah, so let's keep an eye out here. NVIDIA has downside move and support. That's the thing. So good NVIDIA holding here is going to give Nasdaq that strength that it needs. So NVIDIA filling its gap this way is giving that resilience, that oomph. Remember, we've been stronger on the Nasdaq because NVIDIA has been strong. So we're going to see how NVIDIA plays out. Like I say, I don't like to bet that bull setups sell off. But these bull setups are kind of weak today. Happy birthday, Matt. Thanks for the tips. Thank you. Thank you. Y'all remember it's my birthday? Apparently, I got another surprise coming tomorrow. Girlfriend's like, don't book anything for Wednesday night. We've been doing activities galore. Like I told you guys, I went to Animal Safari, got to swim with otters, see giraffes, donkeys, cows, pigs, like this whole thing, zebras. It was crazy. It was crazy cool. And we got to swim with otters. There's kangaroos. There was like these funny looking raccoons with like pointy noses. They look like anteaters. I forgot what they were called. They were super adorable. Then it's like Great Gatsby party we went to. Took me to some bougie sushi place. We traveled to 4 different cities. We did 2 escape rooms. We do escape rooms all the time, by the way. That's like our jam. Our favorite things to do is escape rooms. I think we've done like 65 or 70 of them together. I don't know. We just like doing challenging shit. Chug a beer, do an escape room. You guys have never done escape rooms. They're awesome. Brian, by the way, we need to get the group together. There's one in Houston that there's like this world ranked quality or whatever. It's like top 20 in the world according to certain websites. It's in Houston, but it needs like 4 to 8 people or something. We got to get the group together and go. Chug a beer, do an escape room. Chug a beer, do an escape room. Challenge mode. So we got for cocktails. And then we went to this place in Killeen, Texas. This farm is in a city called McGregor. I've never been out that in those cities between like Austin, San Antonio, like that whole area, or Dallas and Austin, Waco, like that whole area. There's like this triangle of small townness out there. All right. Here to hear X. Pull back. Come on, Q's. Come on, Q's. Again, I don't like to bet against a bullish break, while the short trade may pay out from here on the gap fill to the downside, Nasdaq resilience is still strong enough to fight off this gap and push it higher. So just be careful, traders, today. Buy is always my bet, but I don't necessarily bet that the Nasdaq's going to sell off. And it does this move. I tend to hold off and look for the bull setups. It's a little risky. And again, it's not going to sell off to lower lows. What I want to see personally, I want to see like this is going to fight its way higher. I want to see this like just be nasty. Do this for the day. I really believe we're going to do something like that. There's long and short ops all day long, but it's not going to be like chase for the breakout. Okay, so you want my opinion today, whatever it's worth. I'm just some rando on the internet. I'm not betting on that. Not betting on big breakouts, and only betting on market doing this if it goes up. Chop. I suppose on bottom Q not trade today because it came from below. So anytime it opens below or opens in bear zone under non-ideal conditions, 70% of the days close in the same zone it opens in. So the breakout is rare. The break into mid is a scalp to fill the gap or to fill that void, and that's it. That's what I always do, yeah. Does that make sense, Andrew? So breaking into bull zone bottom one can take a long for a bigger breakout. The problem is you have signals that aren't necessarily good for me to be super confident in that. So to take the 30% trade, I kind of want some confluence. Check, that looks good. Those look like garbage. Those are booty. So with the resilience as being negative, it's just going to have this like resistance pressure as the market is trying to go this way at the same time it's trying to go this way. So that's why it's not rallying really hard. Like I say, you put a gun to my head, I still, you know, hope that it does that. But I'm not taking the long because I don't have a lot of confidence in that setup. Competing signals, I'm certainly not going to short it either. And this is the stronger setup. It's just that we know that breaking from here to here to here and keep going is the rarer case. Happy birthday. Thank you. Love you guys. That group we took out to Pearl's birthday. Oh, yeah. We should, dude. Hey. Jab's sending a message. He said he wants to go out and smoke cigars this week and drink whiskey. You down? I don't know what day he wants to go, but I want to get the boys together. Meta is hot. Sexy meta. Ooh, meta cute. Meta cute. You guys got to take the course if you haven't yet. I'm going to teach you all the stats. I don't give all the information on YouTube at all. Don't let y'all piece it together this way. This 90% is a scalp, by the way. It's not a long for the day. It's a scalp. I only scalp only. Because it wants to be down in here. That. QQQ hit that half cap. Been here for over 2 years. The new course is worth it. Thank you. Thank you. You gotta take it. $20 is going away on Friday. That's a huge promo. Got a ton of people sign up for it, which is awesome. But definitely worth it. If you want to learn position sizing trick. A. Yeah, still $20 for old school. Yeah, legacy people, still $20. We made it that way so all the existing members could jump in for like nothing, because we wanted you guys to catch up. And we're raising a little cash so we can put these probabilities on the chart. So we're like, well, you guys can support the development of that, and we're going to put these probabilities right on the chart, smack down in the middle. Does that pull back? 70% of the time, back to bear zone. I usually take this bear zone to bull zone trade every single time. But I think today I'm going to sit out on this one. I know you say every single time, every single time. But I have a lot of conviction today that this is going to be a good setup from here. I'd like to have it retest the DD band at the bottom. I might take it again a second time from the lower lows. But I already made the scalp once. I'm not going to bet on magic happening again a second time. I'm going to call it. Can't complain. Can't complain. That's on coin. MHP, always a reversal setup. I always reverse MHP. Trade number 2. BLD is a bullish setup, so any break of MHP, I would completely get out of the way if I were trying to short this. But hedge pressure to hedge pressure is always, 2 and 3 are always setups to take. That I like to look at. Coin's been doing good lately. I think the last week or two has been, yeah, it's been like running up since September, actually. Strong. But like I said, today, setups like this, there's always scalp potentials of MHP to wherever. Looks like coin gap down, filled its gap, traded right up to here. It's hard to say where it goes from here, other than retracing and closing below. Majority of time, MHP doesn't break and keep going. If it does break and start to show signs of life above here, I would get out any short whatsoever if I were trying to trade this. Did I see Paul Tudor Jones on CNBC this morning? You probably don't watch that. I don't have TV stations. I used to watch CNBC when I would wake up in the mornings. When I started trading in 2010, I had like a TV in the corner of my office, and I had CNBC playing in the background. I woke up to the Nigerian brothers and all those guys, the old schoolers. Steve Leisman, whatever their names were, all those folks. But these days, I don't even have TV stations. Can you watch CNBC online? I don't have a TV in my office. I would. This is background noise, but I don't know. I tend to not like, as much as I love CNBC. Other than just like briefly getting the news for the day, I probably would just, again, like what's the headlines. I'd rather listen to music when I trade rather than listening to the talking heads of the market. I've been that way for a while. I think after the first couple years, like the novelty of, oh my God, I'm a trader now. And I would have like all my trader stuff on. I'd have like tickers going on the screen. Like I felt like, okay, I had to watch CNBC. I had to watch Bloomberg. I was like a huge nerd for it. I religiously, I'd have it on all day long. I'd watch it day, morning, noon, and night. But now it's like, okay, I kind of want some music. Each time Microsoft and Meta dump, yeah, that's the thing. Resilience is market cap weighted, so it tends to be very, very sensitive to the higher market cap stuff when they're at the edge, like right on the edge. By the way, yeah, so Microsoft, Meta, yeah, so anything that's the trick with any stock is when the stock is right at this dash line, resilience is a little more sensitive to it. So like, let me show you something cool. Resilience is weighted in a certain way, not only for market cap, but to be more sensitive and be more drastic. It's like basically a seesaw. And if all the stocks are on one side and just one market cap, high market cap stock goes to the other side of this line, resilience will make a big statement down here. You see that big statement it made? It's designed to be like a very sensitive indicator only here, and then not give a shit here and here on each individual stock. So the idea is you want to see if the stock is gapped up and is filling its gap. If it gapped up and keep going like Microsoft, not going to be a big deal. But if Nvidia is like chopping all day long here and all the stocks are on one side or the other, it's kind of like the market's balanced and Nvidia is like tilting the seesaw back and forth. So you will see bigger stocks right on the edge have a lot of effect on resilience. Nvidia alone caused that spike. So resilience is like designed to be that good at gap fill predicting, right? That to me is like the whole point of it. Yeah. So while you see is that when it's seesawing around like this, and you see how there's a big sensitivity right here, but not one in the S&P, and a big sensitivity right there and not one in the S&P, then what it means is people are rotating out of Nasdaq stocks, or sorry, rotating out of S&P stocks and into other S&P stocks. So the idea is that if the S&P is flat and Nasdaq is chopping all over the place, then the S&P market cap isn't shifting. They're selling Nvidia and buying JP Morgan, or you know, selling Meta and buying Cat, or whatever it is. So the Nasdaq will be more sensitive because it doesn't have like the industrials, doesn't have the financials, doesn't have energy in it. So if like energy, if people are selling tech and buying energy, then the S&P is going to be relatively flat, right? The Nasdaq being sensitive means people are rolling out of tech stocks and rolling into other things. Let me make a bet. I haven't even looked. I bet you the XLE is probably going to be flat today. And there we go. Look at that. People are rolling out of tech and into energy. Let's see if the financials are the same. Financials flat today. Look at that. Rolling out of tech, rolling into financials. See, I've done this long enough to be able to even know what's going on without even seeing it. Just looking at these two lines. People are rolling out of tech, rolling into energy and finance. There's the selling of tech, right? It's basically what you can do. You posted it? Okay, cool. I'll watch it later. CNBC is entertainment, not for investment purposes, just like MSN feeding you the preferred narrative. Yeah. I used to watch it for the headlines, like, and when I started trading in 2010, it was exciting because, you know, I mean, the market had just crashed. So every morning was like chaos. It was awesome. It was like beautiful chaos. Yeah. In 2010 was like the recovery phase. I think QE2 was still active. Yeah, that's a great question. But resilience, yeah, resilience is designed to like, essentially, I designed it such that you can balance. Here's the greatest analogy. I designed resilience such that you could have a seesaw right here with like cannonballs on each side. Okay. This is what makes resilience such a fucking amazing indicator. And it's so sensitive that it can detect a feather falling on one side and fucking tilt that thing the other way. I designed it to be like the straw that broke the camel's back kind of thing. It's listening. It can balance millions of pounds on both sides, and a feather will send it sharply spinning the other way. Because that's basically going to identify if money's rotating in or out of one stock into the other, or if people are liquidating a stock. There's that 90%. I trade every time. Again, today I decided not to trade, but every single time. You guys, if y'all get Rock Scooter, you can utilize the liquidity maps. Much as you can. All right, I got to go in 5 minutes. We got a meeting with the team. A terrible day today. What about 4K into the challenge account? Oh, I didn't update you. That's an old picture. That's not current. There you go. So, challenge account here. Now, I'm done for the day. I'll take the 38 on the challenge account. I'm inching to first place, so let's see if I get it. But yeah, so when you see that resilience is like all over the place, it's telling you the market is balanced, but people are really like shifting it by cash is fluxing into NVIDIA. That's all this is telling me. See what like Apple and some of the other heavy hitters are doing. Yeah, Apple's on the downside. Google's on the upside. Yep. Microsoft. Upside. Yep. Meta. Yep. Nothing's really through the edge, but you can see that when the bigger stocks are through the middle, you'll see that like feather sensitivity. Literally right here. Like as Meta is continuing to go up here, resilience is not even caring about it. But when you are bouncing back and forth and filling the gap, you see how even Meta is like tilting the boat a lot. It's sensitive inside the box. It's not sensitive outside the box. That's the beauty of our indicator. It's not just looking at price all the time. Meta is going up in a straight line, but it only is affecting resilience right here and right here. Literally, Meta is that turbulence right here, right here, right here. And then as Meta blasts right through right here, this little piece right here. At this point, Meta's not even doing anything on the equation. Meta's factored itself out. That's what it's good to understand, to have an indicator that's conditionally applied. That's the neat little balancing act with resilience, is that it's only looking for stocks. Are they filling their gap or not? So it's a strength indicator inside of the index's own gap fill. The index gaps up or down. Resilience is telling me how to trade that. Nasdaq today and S&P today were both negative. So because they're both negative, it's not having an easy time breaking out of this box. You see that? It's resisting the halfway point and resisting the gap fill. Nasdaq is not just skyrocketing and running because there's enough feathers on the downside tilting the boat that way. So it's going to fight its way up. But to like jump in on a red candle, on a green candle to long and a breakout is fool's errand. And so we're going to get this. All right, love you guys. I'm out of here. I'm outie. I technically be in second place in the challenge. If nobody else moves. So first and second place go down today a little bit. Maybe I'll move up. It's like an 8,000, I think, difference between first place and myself. I got a week late entry on this, but let's see if I get first place. The first two places is a straight to funded real cash account, not just an elite funded account, but a real cash account. A real brokerage account is the prize for first and second place. So hey, I'll get that account and trade that live on stream too. Love you guys. Don't forget to sub to the channel. We're here every single day. My birthday I don't know what I'm going to do today, but I'm going to have some fun. Now I got a tech team meeting with the devs. Guess what we're talking about? Probabilities on the charts. Get into those Zoom calls. You need to learn it. Have access to it. We'll have deals and specials where you can get that package, a little add-on for very cheap. Like we always do everything when we launch it, very cheap. After that, it's going to be expensive. So when we have the launches, get in. Get in, get in, get in, get in. Love y'all. Bye.